thought I'd take a look through what I'm going to call lockdown losers. Well, these are really the stocks and shares that really boomed over the last couple of years due to lockdown, and with people who are stuck at home, they've done extremely well. However, as people are going back to work and not staying at home so much, and then looking at inflation pressures and everything else that's going on, and high energy costs, where people are starting to look saving money and cut corners where they possibly can, uh, the stocks have really taken quite a plummet in some of these cases. So I'm going to have a little look through my watch list here, going from the worst and look at maybe the slightly better ones as we go through. Number one on the list of the fallers over the last 4 weeks, Netflix absolutely has tanked. And what we've seen really with Netflix is lockdown, yeah, extremely good. It's become a very competitive marketplace with so many other streaming services available. And with people maybe been sharing some PIN numbers, which they probably shouldn't have been doing for access to the service, and Netflix cottoning on to that. A lot of those users are then contacting maybe the friend or relative they gave the numbers to, and saying, "Well, I'm not really using Netflix. Are you using it?" And they, "No, I'm not." "Oh, well, I'll just cancel the whole thing." And in their recent announcement, they announced that they'd lost 200,000 subscribers and expected to lose an awful lot more. And the share price has absolutely gone through the floor. So, FuboTV. Fubo, yeah, in a similar way, this is one of Jeremy's favourite stocks. The financials on this look pretty dreadful. And the share price, though Jeremy hiked it up by pumping the stock to some extent, the price has just absolutely collapsed and goes from bad to worse. Now let's look up the list and just pick out some of the ones that are really going to have been hit as well by the end of lockdowns, etc. Shopify was an extremely popular stock amongst retail investors, soaring up to massively over $1,600 per share, nearly 1,700 at its absolute peak. And then the same thing kind of happened. Jeremy's pointing out that, well, it may well be Shopify that gets promoted heavily by Facebook and Facebook users. And with Facebook taking a bit of a decline, Shopify is seeing a big hit as well. Maybe people sitting at home shopping online were using Shopify quite a fair bit, and now they're all back to work and looking to save money. The share price has been dropping very, very fast. Let's look up the list there. Roblox again, the same kind of result for the streaming market, has taken a very big drop again. Peloton, what a great stay-at-home stock. The stay-at-home boom in home fitness saw Peloton absolutely soar. And now maybe a lot of the bikes and things have gone to one side. They're acting as clothes horses and whatever, and people are cancelling subscriptions, and the prices dropped right back down to where it was in the first place. And a difficult situation for Peloton. There has been a rise in a lot of other competitive services as well. Nvidia. Let's have a look at Nvidia. Nvidia as well is starting to drop down. There's news that the product is very much back in the computer stores again, and in many cases being offered on sale. From a time of very hard supply problems to actually getting the product through, and it caused the stock price to rise dramatically as people were hunting the high-end graphics cards, etc., for their PCs. The demand seems to have fallen away for the time being, and that may well be declining further. It's taken a 30% drop over the last 4 weeks, and that's quite a fair way down. Corsair Gaming as well, for similar reasons. Maybe the home gaming market may be slowing down a little bit for the time being. Again, product back on the shelves, although Corsair was fairly well stocked, I saw in PC World in the UK earlier in the year. There has been a lot of short selling pressure on Corsair as well, so the pricing is down. So there's separate videos on Corsair actually showing the pricing is actually extremely good value at the present time. Lucid Motors, they're taking quite a drop. There a lot of hype a few months ago when the first vehicles were coming out and appearing, and the FOMO cut in, the price soared up, and it seems to have pulled right back down again to more sensible levels. Lemonade, another very popular retail investor stock that absolutely took off, overhyped, and the people, I don't know, were not really realizing this is really just an online insurance company. It's nothing much more than that. So um, it, it's it's coming back probably down to probably a more realistic value for what the business is. Square as well, another very popular retail investor stock, seems to have had quite a fallback over the last few months as well. Palantir seems to have been extremely devastated. Really highly popular retail investor stock, again, has pulled back a long way as people come to the realization that it may not be hitting profit for a couple of years. A long term, it's still probably a very great investment, and particularly at this sort of pricing, probably. Again, do your own due diligence before buying into the stock, because there may be some more downside, there may be some upside. Who knows? Amazon having done so well through pandemic and still a very strong business and expanding rapidly in all sorts of different directions, has taken a 24% drop in recent weeks, and then the last one since actually reasonable results, although they were held back by the Rivian stock, with Amazon's significant investment in the Rivian trucks, and the Rivian stock plunging. The Amazon share price has been taking quite a hit recently, so it may be coming up to see a brilliant company coming up on sale. Snapchat's taken a big hit as well, and another stock where investors probably hyped into it to some extent, and then seeing the revenue figures coming through and suffering the same kind of fates as that Meta, Facebook have done recently, with the share price declining. AMD there, very much in a similar vein as Nvidia. So I won't comment further on that one, but I think they're a very similar position there. Tesla shares. Tesla's been very volatile recently. The recent purchase of Twitter and some sale of stock by Elon Musk to help him buy Twitter is causing the share price to jump up and down. And although the financial results were very good and the long-term prospects for Tesla remain absolutely excellent, as the economic climate changes, people buying very expensive electric cars may not be top of their list in the coming year or so, and I think that may well be reflected there in the pricing, and there may be more downside to come. Google's taken an 18.6% drop over the last 4 weeks. It's a big ouch. I mean, this is a beast of a company. But if advertising revenues are falling back, it's going to be reflected in the pricing. We've seen very much the prices of the small cap companies falling from mid-November time, really. Then the downturn hit the mid caps, and now it's hitting the big cap ones. So the big fang stocks are starting to take the brunt of the pain at the moment, and that may continue. Zoom there, another great lockdown stock, very, very popular during lockdown with people doing online conferencing and video calls and things, has taken a tumble right the way back down again, and down 15% for the last few weeks. But look at that figure there. We're down really back at its start. I think Zoom has a very much a place to play in businesses, etc., in the years to come. But it looks like it may be hitting much more realistic valuations at the present time. And now we start to come into some of the more UK stocks. So AO World, electrical retailer online, did extremely well during lockdown, and when people were stuck at home, so they're having electrical goods delivered to the home, done exceptionally well. Now the Sun was reporting the other day that AO World's pricing has dropped. I think it was about a 20% drop the other day in share price, because the users are cancelling their extended warranties to save money, and it's having a real big effect on the bottom line of the business. Pets at Home had a massive rise up during lockdown. Again, when people were buying new furry friends and feed and food and everything for them, and all the doggy baskets and other accessories to go along. Pets at Home were doing extremely well during lockdown. Uh, However, now lockdown has finished, the demand has dropped down as well. Although all those little furry friends are all going to be fed, the share price has taken quite a hit in recent weeks. So online clothing retailers like Boohoo and ASOS again have taken massive hits over the last few months. They were doing really, really well in lockdown, but there's another video out there on Boohoo. but the share price has taken quite a battering as people are returning to the shops. Facebook, Meta, that one has taken such a knock again in recent weeks. The news is not too good there, and the continued massive investment in the MetaVision future, which is going to be several years away from starting to turn to profit and become a new invention of Facebook, along with their other brands of Instagram, WhatsApp, etc. Have people become bored of online social media, or the advertising revenues are starting to fall? Yeah, it's one of those businesses that could be a bit of a dot-com one where it, like the other online social media outlets, almost need to really reinvent themselves and come out with something new and progressive to stay ahead of the game, or they just become fatigued and they go the way of MySpace. I hope it's not with Facebook, but we shall see. Kingfisher's one where I've just put a video out there on Kingfisher Group for its B&Q and Screwfix in the UK. Again, a company that did extremely well during lockdown, with so many people at home looking to do a lot more DIY. Done it very, very well. But things have sort of pulled back a bit. They're hoping there'll be a push back into home insulation as energy prices rise, and they are increasing the number of stores. But the share price has had quite a pullback in recent weeks. So, although it's not all bad news out there, and I'm sure there's a lot of businesses that will be growing in the coming year as the market change, but it's just a realization that the need to stay ahead of current trends and see what's happening out there in the real world, and how that relates to the stock market can make such a difference to your investing journey. So, I look forward to seeing your comments in the comment section below, and we'll catch up with you again soon.